Hey guys, it's Fast Entrepreneur here, and I'm shooting one last video, the third here on cryptocurrency. And so the first one, actually I shot a few, but I did an overview video, and then I did kind of a three-part series where I broke the cryptocurrency market into ICOs, day trading, and now finally this video will be part three, where I'm going to talk about kind of the long buy and hold strategy. And so what does that mean? Well, that means we're not in it for, the day-to-day or even the week-to-week. We're in it for the long term. And if we look at what the blockchain technology is, and we believe in its future, we can see potentially out several years, 5-10 years, what does that look like, and how can this technology impact and change things as we know it. And so what we want to do is we want to build a diversified portfolio of coins, companies, platforms, etc., that we think can potentially be very big gainers in this space. So what we're on the lookout for is a diversified portfolio, just like you would in regular investing, whether it's through your retirement or whatnot, or some of the other accounts. Diversify amongst asset classes. So this cryptocurrency being a new asset class, many people might want to know, well, how much do I, start slow. Don't invest until you know what you're doing, and you might want to start out with just 1 or 2% of your overall portfolio into cryptos. Some of you might want to take a little higher stance. That's up to you. So really, all we're looking for is, we're on the lookout where we want to get big multiples, and what I'm talking about is, ones that could potentially go, say, 20 times, 50 times, or even 100 times or more, return within a relatively short period of time. Say, a 1.5 year period. And, so we've got different criteria and things that we're looking at here. And then we just want to build a basket, a well-diversified basket, right? So currently we've got, several dozen that we're identifying here. And, if you want to get the big multipliers, you've got to get them at a good price. You've got to get them early, and then just ride it out. And then as they mature, well, they can still have a place in your portfolio, but they're not going to be as big multipliers as they could have been or would be had you had them at a much earlier entrance point. Just to give an example, if you buy something at $1 and it goes up to $100, well, you made 100 times your money. But if you bought that same thing at, say, $5, it's not a big difference, right? $1 to $5, not a huge difference. Well, if the same thing goes to $100, but now you bought it at $5, well, 5 to 100, you didn't make 100 times gain, you only made 20 times gain. And I say only and laugh. I mean, that's a great gain, right, compared to most other returns that are usually around. But I just am pointing out the multipliers effect, and the importance of us spotting and getting good entry points into great projects early on. And so, if you miss one, it can still have you miss one early, sure, you could still put it in your basket, at a $5, price, because it probably will still have some room. But you might not want to go all in, or might want to put a huge chunk. You might want to, just have that as a, smaller percentage of your buy and hold portfolio, and you might want to wait and try and find a few, just amazing projects. So anyways, that's it. We're on the lookout for them, and we've got resources and people, and if you want to help, with the vetting process and the criteria, then get involved, take initiative, leave some comments, like, subscribe, and share this and this channel with anybody that you know that might want to take this journey with us over the next year and even the years to come. And if we work hard and we work smart, hopefully we'll just continue to get better and better. So hopefully this helps, and that's all for now. Check out the other videos if you haven't, and look forward to communicating and seeing y'all in the future. All right, have a good one.